Hello, everyone. Today, we're going to explore how you can implement Profit First, create a business budget, and utilize Open to Buy to ensure your business remains profitable and financially healthy. My name is Jacob Curtis. I'm a CPA, a certified Profit First professional, and a business coach. I started Curtis Accounting Solutions to remove the stress of doing the bookkeeping, payroll, and taxes to provide practical business advice that helps e-commerce stores piece together financial freedom. I'd love to hear your thoughts and questions on today's episode. So please leave a comment below and remember to like, share, follow, subscribe, all those things. Profit First is a cash management system that was designed by Mike Michalowicz. It flips the traditional accounting formula of sales minus expenses equals profit to sales minus profit equals expenses. By prioritizing the profit, this method ensures that your business remains financially stable and healthy. And this approach also can be especially beneficial for e-commerce retail businesses, which often you guys struggle with managing cash flow and profitability. And I understand. Implementing Profit First helps you to maintain a healthy cash flow, reduce financial stress, and build a sustainable business. For e-commerce retail businesses, this method can really address the common challenges like unpredictable sales cycles, inventory management, and operational expenses. By allocating or transferring funds to multiple accounts, you ensure your business is always working towards financial stability. To get started with Profit First, you'll need to set up multiple bank accounts. The first account is the income account, and this account is used to collect all the cash coming into the business and act as a serving tray to the other accounts. The profit account has three purposes behind it. The first is to serve as an emergency fund for the business, because it's not if an emergency happens, but when an emergency happens. And then businesses that have what I consider to be bad debt and just debt in general, this fund, the amount of money that's put into the profit account, this account is used to pay off and make extra debt payments towards that debt. And then finally, once that debt is gone, the profit account is there to reward the business owners for their hard work each quarter, kind of like a quarterly bonus. Next account is the owner's pay account, which is to pay the owner's compensation, to pay the owner or owners of the business for their daily work in the business. Next is the tax account. This is to pay the income taxes or the estimated income taxes for the owners personally and of the business. And it's only to be used for income taxes, not for payroll taxes, not for sales taxes or things like that. It's for the annual income taxes of the owners. And finally, the operating accounts or operating expenses accounts is for everything else we haven't really specifically mentioned: payroll, sales tax, rents, utilities, office supplies, those kinds of things. And this system really ensures that each dollar is accounted for and allocated towards your business's financial health. The key to Profit First is allocating the right percentages to each account based on a 60% gross profit margin. Here are the target percentages for an e-commerce or retail store. If your annual revenue is $416,000 or less, then your target allocation percentages are in column A. And if your annual revenue is $1 million, then your target percentages are in column C. So find your revenue and match that up with where you would belong. Now, again, these percentages that I'm showing here are for target percentages for businesses with a 60% gross profit margin. If you have a different margin, which we probably do, then you need to adjust these percentages. Luckily, I have a free calculator for you to use. And here's that QR code that you can scan with your phone or go to the website listed there, and you can get the free calculator and my Profit First starting guide. The Profit First starting guide are the links to the calculator and help you get your business up and running. Unless you're just starting out, you should not use the target percentages as your starting point. We only use targeting percentages if this is your first day, you're just starting out. But you should use your historical numbers and percentages called your current percentages to really figure out where you start to begin. Then work towards these target percentages. To find your current percentages, you need to run the instant assessment. Figuring this out for you is kind of beyond today's video, but you can scan that code on the screen here and download the Profit First starting guide, which will walk you through setting up Profit First, getting your instant assessments, figuring out what your percentages should be, telling you what your targets are. And once you figure out your current percentages, next is to make that plan to get from where you are today to reach those target percentages. So let's look at an example of a business. I call this Online Store Co. In June, they made $50,000 in revenue. Using the Profit First method, these are the allocations that they would see. They'd have $50,000 come into the income account, and then they would allocate 3% or $1,500 for profit, 30% or $15,000 into the owner's pay. And then these are based on those targets again. 9% or $4,500 into the tax account, and operating expenses up 18% or $9,000 would be transferred there. And the remaining 40% or $20,000 would be transferred to the inventory accounts. This company can then create a budget based on these allocations and calculate and figure out what their open to buy is to ensure that they have the right amount of inventory to meet customer demand without overstocking. What is a budget and how do we actually create one? Well, a business budget is a financial plan that outlines the expected income and expenses of the business over a specific time, usually a month or a year or something like that. So to create a budget, you first, number one, need to estimate the revenue or project your sales based on historical data and market trends. So what do you think your sales are going to be for the next coming months? Number two is to determine fixed costs by listing out expenses that remain constant, such as rents and salaries, things like that. Number three is to estimate your variable costs or expenses that fluctuate with sales, like shipping and inventory, cost of goods, and things like that. Those all fluctuate based on if sales go up or down. Number four is to plan for the profit. Use the Profit First allocations to ensure profitability. And number five is to review and adjust your numbers. Regularly compare your actual results to your budget and make the necessary adjustments for the future coming months and periods. Another must-have tool is knowing you're open to buy. Open to buy is a budgeting tool used to manage inventory purchases. It helps businesses plan how much inventory you need to buy each month to meet your sales goals without overstocking or understocking. Open to buy ensures that you have the right amount of products available to meet customer demand while keeping inventory costs under control. There are a lot of different ways to calculate open to buy, but I like this one the best, which is planned sales plus planned end of month inventory plus planned beginning of the month inventory, subtract your on order inventory. This helps you determine how much you can spend on new inventory each month. You want to adjust your open to buy based on your sales trends and your inventory turnover rates monthly for any future kind of planning in months. Let's go through the example of calculating the open to buy for Online Store. Their planned sales for the month of August are $40,000. Their planned end of the month inventory balance is $25,000. And their planned beginning of the month inventory for August is $20,000. So by the end of July, beginning of August, they have $20,000. And they currently have on order about $5,000 of things that will be coming in August. Plugging these numbers into the formula, and we get $40,000. Online Co. can spend $40,000 on new inventory for August. This ensures they have enough products to meet sales targets while maintaining a healthy inventory level. Now, comparing this to the total balance they may have accumulated in the inventory may adjust this down a little bit if they don't have $40,000 in their inventory account. Integrating Profit First, budgeting, and open to buy creates a comprehensive financial management system, and here's how they work together. Profit First ensures profitability by prioritizing profit and controlling expenses. The business budget, provides a financial roadmap or an outline of expected income and expenses. And Open to Buy manages the inventory purchases to align with your sales goals and prevent overstocking. By using these three together, you can actually maintain financial health, optimize your inventory levels, and ensure your business remains profitable. It's crucial to regularly monitor and adjust your allocations, your budget, and your open to buy amount. Review your financial statements monthly and adjust those percentages as needed. For e-commerce and retail businesses, this could mean increasing your operating expenses during high sales periods or adjusting your tax allocations based on quarterly tax estimates. Running a business can come with a lot of challenges, such as cash flow variability and high operational costs, and implementing Profit First, budgeting, and open to buy can all help to overcome these challenges. Solutions include cash management, which is what Profit First does. It helps to manage the cash flow and use the historical data to predict the cash flow patterns and adjust allocations accordingly. Expense reduction, regularly review your expenses and identify areas for cost savings. And then inventory management, implement just-in-time inventory practices using Open2Buy to reduce those holding costs. So if you're ready to implement Profit First, start by setting up your bank accounts and determining your initial allocations. Create create a detailed business budget and calculate your Open2Buy to manage those inventory purchases. Consider working with a Profit First professional like myself to get that personalized and customized guidance that really would help you in your store. And remember, the goal is to create a financially healthy and sustainable business. If you have any questions or need assistance with any of these things, like we've been talking about, managing your company's finances, bookkeeping, taxes, payroll, please don't hesitate to reach out to me. I'm more than happy to help you piece together the financial freedom you're looking for in your business. You can schedule a call by scanning the QR code on the screen now, or by going to jacobcurtiscpa.com/5-strategies-calendar to get started, or click the link in first comment below. And remember to follow me, Jacob Curtis CPA, on Facebook, Instagram, Pinterest, YouTube. Thanks for watching, and we'll talk to you later.